This is your morning brief for Monday, March 25th. Stock markets were down Friday on weak U.S. manufacturing data, leading to an inverted yield curve. This is bad news. This is not good. We haven't seen enough data, in my opinion, to warrant getting too worried about the stock market. There was a scare about the China slowdown. But the China slowdown was the GDP was growing only at 6 or 6.5%, as opposed to 8 or 10 like it was before. 6% growth on a bigger base in a huge economy is still massive growth, and it's still really quite strong. So it didn't bother me at all. This bothers me actually more. This was a contraction in manufacturing in the U.S. and it caused the bond market to lower the long-term rates, and some say it's inverted. It depends on exactly what interest rates you're looking at. Inverted yield curves are really bad. They've always, like almost every single time, have led to a recession, or have indicated a recession. I would say led to. It's a little too strong, but if the yield curve, lasts, okay, so a one-day thing. Let's hold off on recession at the moment, but they're not good. And there's also global yield curves. No such thing as a global, but around the world, yield curves are flattening as well. So that's really tough. That's a tough sign. Now, not only has it been a good indicator of a recession, if it's a lengthy period of time, but also it's really hard for banks to make money. And if banks aren't leaders, it's really hard for the economy in general to do well. So the reason it's hard for a bank to make money because they lend at one rate, usually at the low end, the short end, and then borrow at the short end and then lend at the long end and make that spread just because of different time durations and stuff like that. So it makes it tough for banks. Banks can't be leaders. And it's always been a good indication of a recession. Now, I'm not ready to go there. It's only been, a short period of time, but it's definitely something we're watching and something you got to be aware of. Okay. Mueller report said no collusion. He said there was not enough evidence to indict anyone on conspiracy with Russia in the 2016 election. Okay, I'll have to go along with it. I'm not the biggest Trump fan. But, I did trust Mueller. I don't necessarily trust this Bill Barr guy, though. But he kind of quoted that right from the report. So it's interesting. I do believe there was some wrongdoing. It just didn't, go over the bar enough to indict. And then he also said there's not enough evidence to indict on obstruction of justice. However, he went on to say it also did not exonerate the president either. So for now, sigh of relief in the White House for sure, but there are more things being investigated. This was actually kind of a narrow scope, a deep dive, but a very narrow scope. And Teflon Don has seemed to have gotten out of this for the time being, and we'll see what happens. There's still more investigations in the House, and the Southern District of New York is where I'd be really worried if I were Donald Trump. But we'll see. Futures are down. Let's kind of go back to our number one point where we talked about the yield curve and the U.S. Manufacturing. This is an extension of Friday. So, we got to watch this. This is, like I said, pretty... it's a good indicator. I don't want to... I never like to panic, but it's something you need to be aware of. Okay. In the NCAA tournament, the basketball, all number 1, 2, and 3 seeds make the Sweet 16. It was, in fact, in 2 of the conferences, I think it was the East and the West, it was 1, 2, 3, 4 made it. 1, 2, 3, 4. Another conference was 1, 2, 3, and 5. And the only real bracket buster was Oregon. Oregon is the number 12 seed. They made it. I forget which conference or region it was, but that's the only real bracket buster, so most people would be alive in their pools, and it's just such a fun tournament. Okay, that's your morning brief for Monday, March 25th. Let's find some gems.